I'm a lecturer in accounting at the University of Birmingham, and I'm also part of the committee organizing the conference. So as Rory said, together with Maureen McCulloch, one of the speakers for today, we organized two panel discussions in this conference related to the cooperatives, capital and accountability track. So the first panel discussion today is on accounting for cooperative purposes. And the second one taking place on Saturday at 3:30 p.m. Will be on measuring and reporting cooperative impact. So you're very much welcome to attend that too. So about today's session, cooperatives often face challenges from operating in an environment that is not suited to their needs. And this involves key aspects such as their accounting and accountability practices, which cannot be properly explained, properly understood in a language that focuses only on shareholder firms and the needs of their investors. And this is not only an economic issue, but it has political significance and implications for the role and for the growth of cooperatives. So our objective with our time today is to share some of the thinking about what would accounting for cooperative purposes look like and what is to be done. So we really hope to share knowledge, experiences, and also build a dialogue between researchers, practitioners, cooperators in the UK, but also internationally, and also between individuals within and beyond the cooperative circles. So I will start by introducing our fantastic panel for today. First, we have Maureen McCulloch. Maureen is a senior lecturer of accounting at Oxford Brookes Business School and has taught for several years accounting and financial management for not-for-profit organizations and social enterprises. She's a chartered accountant and has worked as a consultant and finance director for non-profit organizations. And her research and her recently awarded PhD is concerned with accounting for social enterprises, including cooperatives. So Maureen will talk about a concept paper that she was asked to write by Ed Mayo, former Secretary General of COPS UK, about the prospect of a statement of recommended practice, SORP, for cooperatives in accounting and reporting in order to fit the principles and needs of cooperatives. So Maureen, together with Daphne, they're going to share the presentation, are going to talk about the SORP. So we are also very pleased to have Daphne Rixon with us. Daphne is an associate professor of accounting at St. Mary's University in Canada. She's also the executive director of the Center of Excellence in Accounting and Reporting for Cooperatives, CEARC, where she's coordinating different research projects, including the development of international statements of recommended practices for cooperatives. So Daphne is a certified management accountant, and she's an active researcher, having published books, journal articles on a variety of issues, such as sustainability, financial reporting, and performance reporting of cooperatives. And she's also the editor-in-chief of the International Journal of Cooperative Accounting and Management. So Daphne today is going to talk about this, the CEARC project, which is shared with COPS UK and an international committee of cooperative accounting practitioners and academics in order to develop a cooperative accounting SORP. We also have Ian Adderley. Ian's background is in law, and he works for the UK Financial Conduct Authority on mutual society legislation, including cooperatives. And he has worked in civil society, including trade unions, bodies supporting social enterprise and cooperatives. And he has undertaken several non-executive posts with charities and membership bodies, and has served as a trustee and as a chair of the UK Society of Cooperative Studies for several years, making a significant contribution to the advancement of the society, and had the pleasure to work with him as well. And Ian will talk about how a SORP for cooperatives could be applied in the UK from a legal and regulatory perspective, and the value of cooperative SORP. And last but not least, we are delighted to have in our panel Richard Spencer, Director of Thought Leadership of the ICAW, the Institute of Chartered Accountants in England and Wales. So Richard has led on the ICA's thought leadership and engagement program in sustainability. He's also a co-convener of the Finance Innovation Lab founded by the WWF UK and the ICAW, which is devoted to change, to encourage change and create better business models that work for people and the planet. And he's also helped to establish and lead on the economics of ecosystems and biodiversity for Business Coalition to make more visible the impact of economic choices on nature. And he's also contributed to academic debates, looking at issues such as public interest, the role of the accounting profession, and the common good. And I'm sure he will make some interesting contributions in this respect too. Okay, so this is our panel. In terms of the structure of the discussion, each speaker has about 15 minutes to make their contribution. And then we will open the discussion and give the opportunity to participants to make contributions, provide feedback, ask questions, either by taking the microphone or by typing in the chat. I'll be keeping an eye. Okay, so without further ado, and yeah, let's get started. So Maureen and Daphne, over to you.
Okay, I'll just share my screen here. Hopefully you can see that. Okay, so I'm delighted. Can you see my screen?
Yep, yes, we can.
Oh, wonderful. Okay, well, thank you, everyone, and I'm delighted to have an opportunity to participate in today's panel discussion. And first of all, just a little bit about what we are at St. Mary's University. The Center of Excellence is the Center of Excellence in Accounting and Reporting for Cooperatives. We are located within the business school at St. Mary's University, which is in Halifax, Nova Scotia, Canada. And it's been around since 2007 and is largely supported by the accounting profession in Canada. So we conduct research into a wide array of topics related to accounting and reporting, whether you're looking at, financial statement presentation or the non-financial type of reporting, looking at capital and cooperative, social environmental accounting, and those sorts of topics. And I mentioned about, the Center of Excellence. We've been also, I noticed that my predecessor, John Maddox, is on the call today. So John certainly played a really substantial role in moving the Center of Excellence along before I came along to take over from him. So just as a bit of background as to how we got into this whole concept of the SORP, it started with a symposium that CRC organized and actually held in London, England in 2018, and it was about cooperative accounting and reporting. So it was through our discussions at that symposium that the need for cooperative SORP was discussed and identified, and we then went on to form a committee. and International Committee. And I should also state that CARC itself, Center of Excellence in Accounting and Reporting for Cooperatives, we call it CARC, is international in scope. So this fits with our work. So the presentation that we're going to do today really looks at how the UK accounting and reporting for charities might form a basis for a cooperative SORP. And although there's certainly, lots of initiatives ongoing to look at cooperative performance indicators, this research that we're doing right now actually just focuses on the financial accounting and reporting piece. We're certainly going to address the non-financial reporting, but that will be in a later project. So the SORP itself, a research project, we got started really with a paper that Maureen wrote. Initially, it was at the request of Co-ops UK, and it's been published in a journal that we published at CARC, the International Journal of Cooperative Accounting and Reporting. So Maureen's paper is published there just a little while ago. It's there for your reading enjoyment. And so we are actually using Maureen's paper as the basis for this project. So we're very fortunate in that we were able to secure support of the ICA in terms of them passing a motion to support this project. And we want to, of course, continue to develop a relationship with the international standard setters with the goal ultimately of adopting a cooperative format for financial reporting and accounting, and to develop standards that actually reflect properly the substance of transactions related to member capital and cooperative dividends. So CARC, our Center of Excellence, isn't new to developing SORPs, and this body of work that I'm displaying here in this slide, certainly John Maddox played a very large role in the development of these. I came on, I think, when I joined the organization, I think we're around ISORP 6. But with SORP, certainly the idea behind a SORP is that it's a sector-driven recommendation on financial accounting and reporting, auditing, or actuarial practices for specialized industries. And so there's several UK sectors use SORPs in terms of higher education, social housing, limited liability partnership, pension schemes, etc. So, and it's also interesting to note that some SORPs are actually partially enshrined in UK legislation. And you can see here from the list the work of CARC over the past number of years. And we've developed these 6 SORPs, and the approach was that a discussion paper was written. It was then sent out to various practitioners and academics to get their feedback. And from there, the SORP was modified, and these are all published on our website. So I'm going to turn the presentation back to Maureen, and I don't know if I know how to do that. Maybe Rory can set Maureen up as the co-host. Maureen.
If you stop sharing your screen, then Maureen should be able to share hers.
Okay.
Sharing
All right.
Right. Thank you, Daphne. Oh. Oh no, don't want that. Sorry, just finding it. I want to share the wrong one. Is that all right? Can everybody see my screen?
Yep.
Okay. So I'm just going to talk through the concept paper that I wrote, which I mean, Daphne said about John being here. Quite honestly, I took an awful lot of my ideas from John Maddox's work at CARC, but I think I also brought to it a recognition that we tend to look at co-ops as a sort of variant from for-profit models. And I thought that actually we could maybe learn from the not-for-profit accounting formats. So I'll talk my way through the concept paper. Why do co-ops need their own SORP? I think it's because it's very difficult at the moment for co-ops to use their financial statements to demonstrate how the financial aspects of what they do are actually supports for the cooperative activities, which makes it quite difficult to explain both to members and to people who aren't co-op members, sort of to the wider world. They disappear. Co-ops are invisible in the way that we account at the moment, because we have a format for commercial, for investor-oriented reporting, and a format for philanthropic reporting, but we don't have a format for mutuals. For mutuality, we don't have a format. Sorry, I'm trying to move it on and it won't go. I'm very sorry, I've got myself stuck. I'm going to stop sharing and sort my screen out and then come back again. No, I'm sorry, I can't make my screen go on. I'm dreadfully sorry. I've got technology problems here.
Maureen, would it help if I shared my screen again and I can just move the slides along?
That would be great. Yes, please. Okay. I need to stop sharing, but I think I have.
Can you see this?
I can see you moving along. Great, thank you. Yep. So we traditionally, thank you, Daphne, we traditionally have a view of what our formats are: for-profit accounting and not-for-profit accounting. So charities use the not-for-profit accounting. They're public benefit driven. They look at creating social value, and they measure by effectiveness. For-profit accounting is for commercial organisations and basically looks at return for investors. And you've got hybrids in the middle, which are the social enterprises, cooperatives. And my experience was with trading charities quite a lot, actually also with cooperative setups that didn't necessarily recognise themselves as co-ops. But the for-profit, not-for-profit line goes right down the middle of them. So co-ops are looked at as sort of as not-for-profits or as for-profits, rather than as mutual self-help organisations. We just don't have the accounting format to do that. So next slide, please. So because co-ops sit between organisations that are entirely commercially motivated and those for public benefit, we lose this idea of mutual benefit. We actually lose the idea of being able to operate for the common good. It's either public interest or private interest, and they seem to be, and they don't seem to be marriable. Next slide, please. So I was looking at what co-ops could take from not-for-profit accounting using the charity statement of recommended practice, but looking at it as for purpose. So at the moment, it's classed as not-for-profit and it's classed as for public benefit, but that's actually charity law that that defines that public benefit. The format itself is quite flexible. And if we saw it as accounting for the purposes that the activities it's allocating financial resources against, we can use it for a lot of different things. So if we look at charities as working to address specific needs, we can see a parallel in the way that co-ops might actually account for how they address the co-op principles, or how they literally address the diverse needs and interests of their members and their members' communities. Next slide, please. Charity accounts allow for many different sorts of activities. They allow for different sorts of income and expenditure. They have, we call it fund accounting, but they have funds and sub-funds, and you can recognise different purposes in the same financial statement. So next slide, please. I'm going to show the National Trust. So what the National Trust is, a large charity. It's a membership-based charity, and actually its CEO at Co-ops Congress. She came to address Co-ops Congress a few years ago and described what the National Trust does. And actually at the end of her speech, she said it's a co-op in all but name. To which the person sitting next to me said, no, that's not true. It's a co-op in all but ownership, because actually the members of the National Trust don't own it because it's a charity, and that is a major difference. But I don't think it means that you can't learn lessons from the way that the accounting is done. So on the statement of financial activities, so it's a statement of financial activities. It's not a profit and loss. It's not even an income and expenditure. It's a statement of financial activities, how the financial resources have been raised and to what they have been applied. And the main thing that drives it is charitable activities. So you can apply your expenditure to charitable activities. And by doing this in the accounts, in the actual financial statements, they're driving us beyond to get the justification for the activities. So they are recognising in themselves, in this format, the accounts are recognising that they are only partial, and that we need justification for why expenditure has been spent on property operating costs or membership costs. So you're driven beyond the statement to get the justification for it, but you also can see how income is raised from various different places. So the income that matches this expenditure is also split into charitable activities and into activities for raising funds. So you can look at trading for in order to make a surplus or in order to make a profit, and you can also look at trading not in order to make a surplus or a profit in the same format. Thank you. So next slide, please. So we could look at, I mean, these are just suggestions. It's not that I'm saying that this is what we ought to do. I'm just saying that there are ways that we can use the charity accounting to inform what we're thinking about. We could produce statements which show the differences between trading with non-members and trading with members. We could look at dividing members' funds up into those that are redeemable and those that are indivisible. Well, there's lots of different ways that it could be done. I really don't want to sort of suggest too many. So next slide, please. But the main thing is to recognise that they are for-purpose accounting. They send the reader beyond the financial statements for the justification, rather than justifying it by the profit at the bottom of the statement. And next, please. So the purposes are the important elements, and not-for-profit accounting lets us look at diverse purposes. It lets us look at, it lets us recognise the way that people can work together towards multiple common goals. Some of them are generating a return on financial investment, but some of them aren't. And normally, for our sorts of organisations, generating that financial return is not the important one. Next slide, please. So I was arguing that co-ops should consider accounting for purpose that will recognise the subservience of finance to social and community purpose, and that allows for multiple purposes, different strands of co-op activity, underlining under the main objectives. Next slide, please. So we've developed this coordinated two-pronged approach. The UK looking at trying to develop a co-op SORP with the aim of getting it incorporated into UK legislation, because the charity SORP is, the charity statement of recommended practice is recognised under international financial reporting standards. And I don't think there's any way that co-ops are going to be able to fight with the IFRS and get separate standards, but to get a SORP inserted and agreed in the same way that charity accounting is, maybe in UK legislation, would be a wedge. It would be a thin end of what could end up being quite a large wedge. So there's a two-pronged approach, and Daphne's going to talk a bit more about the international approach. And next slide, please. So yes, the Co-ops UK presented a motion at the ICA General Assembly last October, and they took it on and said yes, cooperatives published accounts should enable them to report to members and stakeholders on its financial position in the context of its purpose as a cooperative, and that we need to get a harmonisation of the way that we do it, and move away from the accounting standards for investor-oriented companies, which was wonderful. So I'll hand back to Daphne to talk about how the ICA is actually backing the international part of the project. Thank you very much, Daphne.
Okay. Thank you. So we mentioned earlier that the ICA at their annual meeting back in October of last year, did support or pass their motion. So one of the things that they helped us with was sending out a survey to their members. We had 118 responses, and that represented 45 countries. And the survey was completed by a variety of individuals ranging from controllers, CEOs, presidents, etc., and chief financial officers, of course. And so we were quite pleased actually with that response. I'm not sure how many members they had, but certainly to have, 45 countries being representative in the responses, we were pleased with that. So one of the things we wanted to find out was if their country had cooperative specific accounting standards or guidance, and the responses were 57% said that they did. So that we found that to be very interesting for sure, because what we'll want to do as we work through our project is to look at what kind of standards that cooperative specific standards they have, and certainly that might well help inform what we're going to be recommending. We also asked whether their country has specific guidance about environmental, social, governance topics, and here 43% or 47 of the respondents indicated yes, that they did. So our next steps here, we asked other questions too, but they were more open-ended questions and just too involved to bring into this panel discussion. So just to move along here, so our next steps with our project is to have focus group meetings with practitioners and cooperatives in the UK. We initially, of course, pre-COVID had the idea we would be doing these in person, but we're going to have to rethink that and maybe go the virtual route. But we want to get input to identify, in addition to issues that we've identified ourselves, any other issues of concern to practitioners and to get their thoughts on what some changes are that they would like to see made to the standards and the reporting frameworks. So our plan is, once we do that consultation, we'll develop our international committee will be developing a discussion document, and we will then circulate that to practitioners and academics to get feedback, to look at a cooperative oriented format for financial reporting. And the idea here is, of course, we really want to be able to help co-ops to be able to distinguish themselves from investor-owned businesses and from other for-profit organizations when they're reporting to their stakeholders. And of course, it's, as we all know, it's important to have some standards regarding member capital and cooperative dividends. So currently, we're thinking that the cooperative accounting under IFRS really can't adequately demonstrate the use of resources in terms of pursuing our member-based cooperative purposes. And for-purpose accounting and the use of a SORP will actually allow for cooperatives to have a more useful model to demonstrate their cooperative difference. And a cooperative SORP certainly could be designed to account for cooperative purposes, not just as a reaction to investor-owned accounting, but really as a vehicle to demonstrate our difference and to the movement itself, because I'm sure we're all aware there's folks within the cooperative movement who don't really fully, comprehend the difference of, what they're supposed to be doing versus, other organizations into wider society. So that concludes my remarks on our cooperative SORP. So I will stop sharing my screen and turn it back over to our organizers.
Thank you. Just a quick question, Daphne. Are the survey responses available to the public? Christiana is asking.
Eventually they will be. We have some translation that we have to do because not all of the responses to the open-ended questions came back in English. So we've got some work to do, but yes, we certainly will make the results known. And when we develop our discussion document, we'll be circulating that to, individuals that, sort of on our mailing list, but we'll also have it on our website and hopefully have the link sent out as well through ICA, Co-ops UK, and other organizations.
Yeah, thank you. So over to Ian.
Thank you. I don't have any slides to share. I'm slightly glad that I don't, in the sense that I'd have been frantically deleting some to avoid duplicating things that have already been said, which I agree, and those contributions have been fantastic to that, and have set out the background to the SORP and its development. I think I come at this on behalf of the Financial Conduct Authority as registering authority for mutual societies in the UK. With that, I'm talking about a subset of mutual societies, those registered under specific pieces of legislation, and mainly here we're talking about the Co-operative and Community Benefit Societies Act 2014. I think it might be helpful to set some context, because it differs in different countries as to the way in which they go about legislation for cooperatives. The UK has got a fairly open approach, in the sense that there's no legal definition in the UK of a cooperative, and there's also no legislative definition of a mutual. So cooperatives in the UK are free to take any form of legal structure they want, or none at all. The data that Co-ops UK publish in their Co-op Economy report, the vast majority of cooperatives in the UK do choose to incorporate under the Cooperative and Community Benefit Societies Act. So that does capture most, but not all. You've got some as LLPs, some as companies limited by guarantee, or even companies limited by shares. So I think one thing to keep in mind, and that goes to the fact that I think it's been really good that there's been a lot of sector-led work here, because there's no one body in the UK responsible for cooperatives, in the sense that you've got one body for England and Wales and Scotland and Northern Ireland, between the three of them covering charities, for instance, and charity law. Even if you don't have to register with the Commission, there's still got the regulatory scope. There's no one body with regulatory scope for cooperatives. Secretary of State for Business, Energy and Industrial Strategy has responsibility for the word cooperative in names, but there's no overarching regulation of cooperatives. I think that's important context to set. From our perspective, and I will sort of selfishly largely talk about co-ops in terms of co-op societies, because that's what I'm closest to, but I do so kind of cognizant of the fact there are other cooperatives using other legal forms. From our perspective, co-ops registered under the legislation as a co-op society must at all times meet the condition for registration, and that's not prescriptive in the sense of, it says to be a cooperative society, you must be a bona fide cooperative society. That's the legislative test. So we did an exercise a few years ago. The registrar guidance had always referenced certainly since 1995, had always referenced the International Cooperative Alliance statement. I've not gone back much earlier, but we expressly recognised in 2015, we said that our definition of a cooperative is, and we use the ICA definition around it being an autonomous association of persons united voluntarily to meet their common economic, social and cultural needs and aspirations to a jointly owned and democratically controlled enterprise. We reference the fact that's recognised in international law to the International Labour Organisation's recommendation 193, and we use it as our definition. When you asked me to join this panel, I think one of the things I thought about is what are the aspects that might justify a SORP or make it generate a need for it. And the three things I'd written down was purpose and definition, capital, and member relationship, with the three sort of broad headers I'd written down. And yeah, that came through in the other presentations around the purpose aspect, and I think I also expressly draw out the definition there, because as a registering authority, we need to be able to reach a decision as to whether something is a cooperative or not. That's not an easy question. I think we have to make definitive decisions within certain timeframes as to whether something definitely is or definitely isn't a cooperative. Whether we're going to register it or refuse it, or to cancel it or not cancel it. So we're having to make those hard decisions hundreds of times a year. When you've got something where the definition is so important, and where the ICA statement, I think if I had it up, I'd put the link in for people, if anyone can put the link into that, where the ICA, where you've got a definition like that, then it would surely follow that people would want to know whether that definition is being met, and that the financial reports could be one of the ways in which that's done. It can't be the only way, but that would certainly be a really helpful way to contribute to an understanding of whether something was a cooperative or not. I think it's important looking at the audiences for accounts. So yeah, I like to emphasize there's a reason why every limited liability entity in the UK, and I think certainly as an assumption throughout most of the world, but certainly the UK, has a legal obligation to submit accounts to a body that's legally obliged to make them publicly available. And this requirement sits alongside the legislative requirement for cooperatives to already make their accounts available to their members and people with an interest in their funds, to already display their balance sheet. So you've got to keep in mind the audiences. You've got the society itself, you've got its membership, but you've also got creditors and other third parties that want to view these accounts and want to see them. So the question is, what are the accounts telling people, and in what way can they contribute to understanding whether it's definitely a cooperative or not? And I say contribute to. The other aspect is capital, and looking just at the co-op society form for a moment. Cooperatives, going back to the ICA definition, are association of people. Companies are association of capital. The company's memorandum states its amount of share capital. An amount of share capital comes together and forms a company. Fixed capital, albeit there are ways to change the amount of capital now, and there are steps to go through, but it's by and large fixed capital, a fixed number of shares. Societies aren't. Societies are a variable capital. The number of shares in a society, certainly a larger society, will change on a daily, if not hourly basis based on the membership size. Every time a new member joins, they become a shareholder. If a member leaves, they might withdraw their shareholding. So by the very definition, they're an association of people. You must know who the members are. They're on the register of members. And yes, they've got some capital, some share capital, but they're an association of people. Them having variable share capital compared to fixed is a fundamental difference between the company form and the society form. Huge fundamental difference. Shares in a cooperative are not easily transferable. The transfer of shares in a cooperative society is subject, each transfer is subject to the consent of the board. And when I looked through the legislative history, this changed around I think it was 1893 it changed. A relaxation was brought in 1893 because before then, if one member wanted to transfer their share to another, you needed to get the consent of the General Assembly or the sort of a general meeting of the society, as well as the board. It was a two-step process on the basis that you must always know who the people are because they're your members. And that's very different to shares in a traded or listed company, for instance, where they might change every few seconds. It's very different to a situation where you've got large institutional investors with a pension fund investing millions and on behalf of other people, and you don't know who those people are as the organization. You just know you've got a pension fund investing in you. So the relationship, we're also looking at things like dividends based on participation, the patronage dividend, whether that's in a consumer cooperative or whether it's in a whether it's in a workers cooperative where you might be looking at the relationship with labour and sweat equity, or in a producers cooperative, or if it's in a agricultural co-op, we might be looking at throughput of supply or demand, if it's depending whether it's a bulk purchasing or supply cooperative. So you've got a fundamentally different relationship with capital in a cooperative, some of which is legislatively bespoke to co-op societies, but characteristically common no matter what legal form they're used in. If we look at Principle 3 of the International Co-op Alliance statement, looking at member economic participation, members are meant to contribute equitably to and democratically control the capital of the cooperative. At least part of the capital should be the common property of the cooperative. Members should receive limited compensation, if any, on capital subscribed as a condition for membership. How many sets of accounts show the capital subscribed as a condition for membership versus a capital subscribed over and above that as an investment? Because that's an important distinction. The ICA guidance on the principles talks about that. If you have to subscribe a £1 share to be a member, but you also happen to have 99,000 other shares in there, only one of those shares is as a condition for member. We should be able to see what level of interest has been paid on that versus what level of interest has been paid in the nature of the financial investment relationship. The influence of non-user investor members is hugely important to determining whether something's a cooperative or not. Who's controlling the cooperative and for what purpose? And that segues me into membership, because it's difficult to distinguish capital from membership because of the way they reflect there. I think we've talked about the importance of members in terms of decision making, holding to account, the role of capital, the members' role in stewardship of the society. So there's all sorts of things there. But also, when we go back to the ICA definition, to meet their members' social, cultural, and economic needs. So that's, what are those needs? How are they being met? It's economic, social, and cultural. And that's definitely an and, it's not an or. You only have to go and read the fact that the day before the General Assembly in 1995, the German delegation, the board got rid of the and cultural, only to be overturned the next day at the General Assembly to put the and cultural back in, because it's not good enough simply to serve economic need. And if you're serving the social and cultural need, are you doing it in an economic way as an enterprise, which cooperatives are? So all of those things are really important, and I think the financial reporting could be a really useful way in contributing to an understanding of whether those things are being met. For members as well, how can members hold to account? If we look at education, training and information, principle 5, members need the right information to do their job to hold to account. Principle 1 talks about membership being open to those able to use the services and willing to accept the responsibilities of membership. But principle 5 obliges a cooperative to have the right level of education and information available. Those two things are interlinked. How can you fulfill the responsibility of membership if you've not got the information to do so and you can't get it? So those things are really important to it. Yeah, things like mutual trading status in the tax space have shown the importance of recognizing what is and isn't member trade or non-member trade for certain types of cooperative. Tax law has long recognized the difference of whether whether something, if you can't make a profit from yourself, and tax laws been in that space for a long time. If we look at what you might see on the accounts is total amount of shareholder funds. That doesn't tell you how many members there are, because you might have more than one share per member. That doesn't tell you the changes to membership over time. That doesn't tell you what's investor shares, what's withdrawable share capital, what might be non-withdrawable, non-transferable share capital, and therefore a permanent capital, which is hugely important to creditors. This would help cooperatives if it is really articulated what amount of permanent capital do they have, because the assumption would otherwise be none, which is very different. If you're a creditor, even something as basic as I'm supplying you with some paper, you can pay me in 30 days. Well, actually, I'm not going to take that risk because you've got zero permanent capital, and if you get into an insolvent position, I might not get my money back. Up all the way up to sort of pension fund liability calculations and this kind of thing. I think from an FCA perspective, we have the societies are obliged to submit the balance sheet and a sort of revenue accounts. We've got the power to specify other things that they have to submit. So we specify that in an annual return form, the AR30 form. And we say you have to tell us how many members you've got, the highest rate of interest you paid on share capital, standard industrial classification, and a few other bits of information that we ask for. Those are only being asked for of cooperatives that are registered with the FCA. So if you're looking at a cross-movement, cross-sector comparison, if you're looking at a SORP, the question is how far across does it go? And if it's going across all legal forms, you would want that to get the cross comparison for the whole movement in the way that the charity SORP deals with companies limited by guarantee, companies limited by shares, unincorporated associations, trusts. It deals with the breadth of charities in the same sense that co-op can cover a breadth of legal forms. I think just lastly, someone mentioned around legislation. I think we've said in a publication last year, admittedly in the context of a report on alternatives to high cost credit, we're looking at credit unions, but one of the things we said in reference to the Cooperative and Community Benefit Society Act as well, is that we suggested to the Treasury that they should consider if there is value in a review of society law. And by review, we're talking about, so company law had a review that resulted in the Companies Act 2006. Charity law had 2 reviews, I think, that resulted in the 2006 Act, the 2011 Act. The 2014 Act isn't new, it's a Consolidation Act. Its name only changed through a 2010 Private Members Bill. Before that, it was a 1965 Consolidation Act. Before that, it was the 1893 Consolidation Act. And then there's a couple of pieces of legislation from 1852 onwards that leverage the friendly society stuff. There's never been a review of co-op society law. The word co-op only appeared in the legislation to the Prevention of Fraud Act 1939 because of concerns over share pushing. which is why the only definition of cooperative other than bona fide co-op is it can't exist for the purposes of paying interest or dividends or money invested with or lent to the society. So it can't be an investment vehicle because it came out of the prevention of fraud concerns. So yeah, there's a question as to whether there's value in a review of that legislation in the same way that charities had and companies had, and that may well be your hook to also ask for the things around the SORP. That'd be a useful conversation. I think from our perspective, we're very interested to see how this work evolves. We welcome the sort of a setting and raising of standards and a enhanced clarity of information and usefulness of information is certainly something we'd welcome, and we're very happy to continue to be involved in the conversations as those go along.
Great. Thank you very much, Ian. And over to you, Richard.
Okay, thank you very much. And thank you for inviting me to come along and speak to you. I think the things I'm going to say are going to be very different, but it struck me that in those fascinating presentations that we do share something, and there are touch points, and I think that is around how alternative views of the world can become invisible in accounting, and how do we make the common good, if you like, visible. And so I wanted just to start with thinking about two crises. Back in 2008 and the financial crisis, ICAEW hosted a series of high-level roundtables across the world, and we asked, was it a crisis without a legacy? And looking back, I think we'd have to say that there was a legacy, but maybe not the one we hoped for. The way the financial crisis played out definitely contributed to an undermining of belief in international organisations and facilitated a retreat into nationalism. It would be, I think, fair to say that the lessons of the crisis were not learned. And more specifically, I would have to confess that the accountancy and finance professions did not come out of it well, and that actually we dodged a bullet there. And so here we are today, a series of corporate failures and audit shortcomings later, and to be honest, a profession at its watershed moment, as we now face another crisis. And much as that mainstream may want to call the coronavirus a black swan, or the COVID-19 crisis a black swan, it isn't. There was far too much discussion about disease and pandemics in the mainstream long before it happened. And actually this swan came with lots of strings attached. And I think it's also important that we have finally recognized that COVID-19 is but one chapter of a much greater unfolding crisis of climate emergency, of massive biodiversity loss, and rapidly increasing inequalities. And those feed off each other. And it's that systemic understanding that is important. And I think all of these are factors in our choosing not to see what happened. It's somewhat like Wilberforce said about slavery once he had failed to get the abolition through the British Parliament. He said, you may choose to look the other way, but you can never again say you did not know. And I think our COVID moment and our Greta moment have been ones where we can, as businesses and accountants and the finance sector, no longer say we don't know, but we can choose to look the other way. And I think that is the question is now, is there a legacy? Will we waste a good crisis? And now is it now time for the profession to show leadership and to become part of the solution? I think there are kind of three touch points that I'm going to touch on that I've been involved in. One was co-convening the setting up of the Finance Innovation Lab, which is referenced in the conference agenda. The other is establishing what is now called the Capitals Coalition. And the third is our advocacy now for a green and fair recovery and the profession's role in that. And I think over the years, between setting up the Finance Lab in 2007, then setting up the Capitals Coalition, as what was then the Natural Capital Coalition that came out of the TEEB project, and now driving through our Global Recovery Hub, a green and fair recovery, I think what we've seen is a shift, a seismic shift in society's expectations of finance and business, as well as finance's business's recognition that this has to change, that if you like, there is no prosperity on a dead planet. And there is a kind of question in my mind that is business at its Kennedy moment? Are we, with our international financial reporting standards and our legal fiction of a company with its boundaries, actually recording in accounting everything but what people find valuable about what business and finance do? In other words, the public good that could be created and why businesses and finance, why the economy exists, its purpose. Are we actually excluding all of that from our representation of business? So what is the role of the profession? Well, if you go into Chartered Accountants Hall, and one day I'm hoping we'll all be able to go there again. It's a very beautiful interior. In the main reception room, this was the home, has always been the home of the Institute of Chartered Accountants in England and Wales. There are the 4 virtues that our founders saw as being the guiding virtues of the profession, and they are wisdom, prudence, truth, and justice. And I think that the kind of narrative that comes out, and I admit I'm imposing my own, is that the craft of measurement, it becomes a profession when our members apply wisdom and insight to that measurement. And they do that with prudence. And they do that so that the truth can be told and justice can be done because people can be held to account. It's at the heart of it, at the heart of all of this, is the ability to hold governments, people, institutions to account. And of course, it's absolutely, but to kind of critique this, of course, it's not the truth, is it? It's an interpretation. And interpretations are but one truth, and they tend to be a function of power, not truth. But what it does mean, I think, is, and this is our advocacy around the profession, is that our members are not passive recorders of past events, but are active creators of an interpretation of the world that informs decision-making. In other words, chartered accountants create trusted information and insight, which inform our understanding of the world and the resulting decisions that shape our economy and our lives. They therefore have the ability to create new realities that drive different decisions. In other words, those things that you hear today and I talk about as being invisible can be made visible in accounting and can drive different decisions. Organisations look to the profession to make sense of risk, uncertainty and opportunity and to help them craft a way through that. So the role the profession plays within the economy is an enabling role. A lot of our members, our members in practice advise about 3 million UK businesses. So during this recent crisis, they have been almost like first responders coming to the economy and making sure that the cash that came from the taxpayers, came from the government, came from the people, was fed into those businesses to keep them going. And there is, so there is a sort of function around enabling, but that's a very powerful role to have and one that needs to be handled wisely. So it kind of asks the question, how does the financial system and the real economy build nature and society into their decisions? How do they make them visible in their management decisions and the management information? And how do they make them visible in their, in their disclosures to the market in order that other people can make decisions about them? And that's the important piece about the relationship between businesses and finance, is that for business, the finance sector is almost like a policy lever. So prudential and regulatory pressures put on banks and insurers and asset managers are then put into the business economy through price signals and lending decisions and investment decisions. So when we set up the Finance Innovation Lab, we had this the very short-lived satisfaction of being able to say, "I told you so." We set it up just before Lehman Brothers collapsed. But the question we were asking there, and we came together with WWF, so we had a sort of institution of the city teaming up with a civil society organisation, and that if you like, what we called it a constructive disagreement, our role, because if we agreed about too much, we probably weren't getting any kind of real insight. But if we violently disagreed all the time, nothing would happen. So the important piece here was that we had this kind of friction that worked very well. But what our question was what does a financial system that drives sustainable outcomes look like? And over time, we've since, a few years ago, we and WWF floated off the Finance Innovation Lab as an independent organisation. It has significant influence as sitting just outside the system, critiquing it. And you have to have in our kind of theory of change, if you like, in our belief system, is that you need somebody outside championing the new system. And I think the Innovation Lab does that, and it does that now through being an incubator for financial system entrepreneurs. When we set up the Natural Capital Coalition, the goal there was, how do we build our dependencies and impacts on nature into our mainstream decision making? And I think what we've seen in the Capitals Coalition are three very significant shifts. One is from thinking about impacts to thinking about dependencies. If all you think about is your impacts, they really just sit outside your business, and they could be anything. You could say, well, we gave £3 million to Global Canopy, and actually we didn't change the business model at all. We're still pumping out coal, we're still producing carbon, but we gave this money to Global Canopy, so we've had an impact. Actually, the shift to dependency is about recognizing the strategic importance of nature. And now with the Capitals Coalition, it's the broader thing of understanding the strategic importance of nature and society for business success. So suddenly they become strategic once you understand your dependency on them. The other shift is one from measurement to valuation. Again, measurement can sit nicely, you can measure everything forever, but so what? Unless you start to think about valuation, and valuation is not putting a price on something. Valuation is understanding, why does this matter to me? And once you understand why it matters, again, you move it inside the organization, you make it strategically important. And the third one is a shift to systems thinking, from putting things in separate buckets to understanding their interconnectivity, because it's in the interconnectivity that change is driven. It's understanding that climate change and gender equality are connected. It's understanding that life on land and life underwater and prosperous cities are connected. And all of these are connected and underpin your business success and our economic success. And once you see it, once you started these three shifts, what you're doing effectively is making the corporate boundaries an irrelevance, because you've understood that you've got to look after these things that sit outside your corporate boundaries. They have to become visible to you and to the board in order that you're succeeding, your business success is continuing. And it comes back to a basic accounting principle. It's about capital maintenance. It's about saying, are we creating value or not? So when double entry bookkeeping was created by Pacelli in the medieval Venice, it wasn't because the people of Venice were beating on his door and saying, give us an integrated report. They were saying, people were saying, how do I know if I'm creating value? And this is what accountancy is all about. So if we also think about what is RCAW doing today, and how are we driving things? So we put into our qualification the Sustainable Development Goals are now examined in the qualification. The TCFD, the Task Force on Financial Related Disclosures, in there. A number of other frameworks are in there and tested. We signed up to the Green Finance Education Charter, which means that we've embedded that in our professional level qualifications. We're establishing a climate change and sustainability community for our members, and pushing at them the question, are you professionally ready for the crisis we face? And I think where I'd like to kind of finish is, you know, collectively, we have to question if the institutions of government, of civil society, of business and markets, and yes, accountancy and finance are fit for purpose. Do we have the courage to learn from this crisis and then adapt and evolve to meet the greater evolving crisis that I talked about, and develop new industries and new products and new ways of doing things? Maybe discovering old ways of doing things and recognizing them. Can we become change agents, challenging the status quo in our organizations and with our clients, charting a route to the new world? Or will we just continue to hold conferences and talk about things? And I think my last thought is my good friend, Jan Bebbington. Something of a heroine of mine, but one of the things that she's leading a group thinking about and has published on is the idea of ecological and sociological accounting. If you think about, particularly in the engineering and the economy world, in the economy, the world of economics, we had the kind of neoliberal model. And somebody came along and said, we haven't got anything about nature in here. So we got environmental economics, which was really saying, this is how the economy works, but let's think about nature and the problems of nature. And we invented externalities. When ecological economics came along, it was saying, no, you've got to start with nature. You've got to start with the problem we're trying to solve and say, what would be the economic structure that would work with this? Where Jan is leading people and a group of academics is to we've moved from accounting to environmental accounting, but that still supports the existing model. It doesn't question the model, to one that says, no, what is the problem we're trying to account for? And how do we structure an accounting system that reflects that? In other words, the big shift that we have to do is to put the invisible in the middle, put the problem in the middle, and think about how do our institutions, including the institution of accountancy, work around that to solve that problem. Thank you very much.
Great. Thank you very, very much. Very interesting ideas and insights. And it will be nice to see how all the things that Richard talked about the profession and the debates that take place there, link with the debates we have in the cooperative movement and how we move forward. So this is also the purpose of today's panel as well. So we really hope that people, practitioners as well, reflect on their practice and, you know, ask questions or, you know, provide feedback on the challenges they face, or they think this is a good idea or makes sense, as well as, you know, other points. So what I'm going to do is we have about half an hour. It depends on the contribution of people, how long we're going to stay here, but I think I might be taking some questions and then I will ask the panelists to respond. I will start with a few that I have from the chat box, if you don't mind, Rory, and then we can take the questions. So we had one question from Andrew, who says that he recalls that 30 or more years back there was talk in the co-op world of trying to engage with the IASB, as was the IASC, to progress international accounting standards for co-ops. And does it mean that this initiative ran into the sands? Are you suggesting that there is little scope of progressing things through the IASB, the IFRS? Yep, Maureen.
I think we are really. I think in the discussions that we've had, we thought it's probably better, or actually just doable, maybe, to go for a statement of recommended practice, which would not mean sort of fighting international financial reporting standard by international financial reporting standard, but no, co-ops can't do it this way, we want to do it a different way. But if we had a statement of recommended practice, then the committee that sort of oversees the co-op SORP would interpret the IFRS and see how co-ops would be able to operate under it. I think it wouldn't be a bad idea to fight the IFRS, but I don't think we'd ever win. So it seems easier to or achievable to do it a different way.
I also encourage the panelists to ask questions to each other. They feel like doing so.
John just waved, and I think he would be awfully interesting to hear on this because he knows the history.
Yeah, John.
Hi there. Yeah, it was just a comment about the IASB really. Myself and Fernando, who's on this link as well, we were involved in presenting to International Accounting Standards Board about 10-12 years ago, and we presented on cooperative equity. The big question they had actually was, could we actually show that cooperatives internationally follow the same approach with member equity? And we weren't able to do that. We weren't, because they were saying, well, if it doesn't apply internationally, then they can't really take into consideration any difference. So because cooperatives are formed in very different ways in different parts of the world. So that was an issue. The other thing they mentioned actually was the invisibility of cooperatives. Some of the members attending that event said they thought cooperatives were something from the 1800s. And so it was news to them that they were still around. So the invisibility issue is quite big. But there was quite a lot of resistance to any desire to incorporate a cooperative difference into the IASB IFRS reporting. Partly because of this issue, as they said, they couldn't see an identifiable difference that was occurring throughout all cooperatives. So it's just a comment on that, really.
There is another comment question from Ian. Ian, would you like me to read, or would you like to raise it yourself?
Yeah, I'm happy to speak it. Can you hear me okay?
Yes.
What did I write? Well, it was this idea of if we're going to have purpose, co-op purpose in the accounts, which I think is a really good idea, then what's to stop a CEO making all sorts of claims for, cooperative activity, which aren't reflected in reality? And I mean, there's an example of that this year. The AGM of the largest consumer co-op in the UK, the CEO didn't take any questions at all. Just, blithely ignored them. And so how would you, it seems to me the answer to that may be that members seem to need to be able to provide some sort of audit for the figures that are entered in the accounts.
Yeah. Anyone would like to respond to that? Rory?
I've got a question as well, but on Ian's specific point, the structure of the Mondragon co-ops provides for that. So there is an elected audit committee elected from the General Assembly, one of whose purposes is to check the figures that are provided to members. for the basis of discussion. And I also mentioned in the chat to Ian privately that the social audit movement of the 1980s, which Fritz Breckley is here, I noticed, he very much introduced social auditing for precisely the purposes that Ian is describing. The purposes of the co-op are set by the members and not by the executive committee. The query I had for the speakers, if I could just put it, is one of my colleagues has been writing about the need to identify currencies for the capitals that are not financial. And I wondered if that argument about identifying currencies for non-financial capital has extended into the work of the ICA, EW, or I think the sustainability group there.
So the quick answer is no. So do you mean kind of cryptocurrencies or other forms of valuation?
The argument is that if we're going to account for natural capital, we ought to identify a currency that isn't convertible into finance. It's a currency that we understand on its own terms. I have been sent some papers on it, but I haven't got around to
Well, I think the challenges with that is not unlike the challenge of Bitcoin, which was going to kind of be a major assault on the financial establishment and replace it. Is that you kind of get to the city gates and then you camp outside, and I suspect that's it. There is a very legitimate argument about which is the concern about valuing nature or valuing society is in danger of commoditizing it. And so valuation does remain a contested space. There's a part of me that just thinks that ought to always be the case, because it keeps people honest. It stops that happening, because that's what I was trying to say earlier, is that valuation it isn't necessarily about putting a financial figure on something. It's about saying why it's important. And actually, I would say that initially one saw everybody valuing nature, and the argument was, is it a price or a value? And I think now that we're seeing a much greater sophistication in business, where there are a number of ways in which people talk about the value of nature. Not all of them are financial, and not all of them would ever lend themselves to any kind of monetization or so on. So, for instance, the spiritual value of the place, or the cultural value of the place, or the inherent value of the place can't be captured in those, but can be captured in other ways.
Okay, so we have two questions for Ian specifically. The first one from Fernando is about whether Ian thinks patronage dividend are an expense or a distribution of profit. And the second one is from David, who says, I'm a member of a Welsh community co-op energy venture who have been very successful in raising large amounts of capital, mainly from the home counties. AGMs are rather amateurish and whilst members are very supportive regarding climate change, so this appears to be the main focus rather than effective member governance. Ian, any thoughts?
So on the first question around dividends or the sort of patronage refund, I think we have many accountants in this room, and I'm not one of them. So I think I can give a policy-based and sort of cooperative-based answer, which is, if you look at things like the co-op guidelines on the principles, or if you look at work produced with the International Labour Organization by people at Haag and Henry, I think the co-op movement's historically distinguished between profit and surplus in terms of language that it's used. Profit being from trade with non-members and surplus being trade with members. and therefore profit should go into indivisible reserves and surplus should be returned to members in proportion to their transactions, in the sense of you've charged them more than you needed to once you've got to the end of the year and reviewed your financial position, so you refund them that by way of dividends. I think in terms of the accounting treatment of them, I will duck that and leave that to an accountant. On the second question, I think we don't comment on any particular individual society, so I can only speak generally. I think we have guidance that we've published under the Co-operative and Community Benefit Societies Act. I can share a link to that. That sets out the ways in which societies can comply with the legislation. It sets out information around, in the sense of cooperative societies, democratic member control. It also includes sections around payment of interest on share capital. Chapter 6 covers the treatment of share interest or dividends. I mentioned before the test around a cooperative can't exist as an investment vehicle. I think so I can't really comment much more than in sort of very general terms there. I think in every cooperative, there's always a challenge for members and a challenge for the cooperative. Members want to hold the cooperative to account. The cooperative want to be held to account by its members, elections for the board, etc. That has to work both ways. Members have to accept and exercise their responsibilities of membership, and the individual cooperative has to facilitate and enable them doing so through the provision of the right information and that kind of thing. I don't know if one of the accountants wants to come in on the profit distribution dividend point.
Sorry, unmuting in the wrong place. I just really wanted to say it's one of the things that first struck me when I looked at the way that co-ops talk about making profit or even making surpluses. Because when I first came across the patronage dividend, I thought, you shouldn't call it a dividend because it makes it sound as though it's a distribution of profit. And like somebody said earlier on, but it was Ian, you said, the basic taxation principle, you can't make a profit from yourself. So you can't really make a surplus from yourself either. You can't, it's either it's a rebate on prices that you've paid that are too high, or it's wages that aren't yet distributed. So it seems wrong to talk about the patronage dividend in the sort of profit type terms. I think it's quite misleading. And it is sometimes, I mean, in some, like in mid counties accounts, it's shown sort of quite clearly, sort of payments back to members. But I think it would be almost better if it was actually categorised as, rebate or rebate of overpayment, rebate of or wages that are owing for the year.
Mm-hmm. I think John would like to respond to that, and then Freer. Yeah.
Hi, yeah, it's in response to Fernando's question. I mean, my impression is it varies depending on tax rules in any country, and co-ops, being very practical, will opt for the most tax efficient approach to it. So if they're allowed to treat it as expenditure for tax purposes, then they will. And so I think it overrides what might be a more ethical approach to it, but it seems to vary depending on tax law per country.
Thank you. So Freer, is it that in response to Fernando, or is it a different question?
It's a general statement, I think. Hello. I missed the beginning. I was a bit late. No, I just talking generally about sort of how to, what we seem to be going around a lot about what are we measuring and how do we determine and value that idea that we want to measure something. And I think just going back many years, to the late 1970s, I was involved very much in worker co-ops during that period in the UK. And under really sort of part of the industrial common ownership movement, which was alongside the co-op movement. And we started to work with the idea of social accounting and audit. And we quickly got involved in, what kind of, what currencies are we using? How do we determine currency? And we very quickly moved away from that notion of having different currencies in which to measure performance, and just went back to a simple idea of actually saying, well, if the cooperative forms a set of objectives, and we gave them at that time, financial objectives, social objectives, and environmental objectives, and we put them in that kind of framework that later became, I think, the triple bottom line, and then set targets and set standards to which we could then measure against. So instead of having generic currencies, or whether we're all going to use this method or use that method, we just tried to formulate non-financial objectives, and then put in some method of measuring. I mean, they were quite crude in the 70s, I can assure you, but it was trying to move away from the big debate about currencies and how we were going to determine that, because we were not getting anywhere. So we just went back, and I still think that there is value in just cooperatives establishing for themselves a set of objectives, social, environmental, financial, and then recording, monitoring that, and managing that, and recording and being accountable for what they've achieved in relation to what they said they were going to do. And that was really the basis of the kind of original social accounting and audit system that we applied some years ago.
Right, thank you. I have two questions. The one is for Richard in particular, and the one is very interesting for everyone. So the one for Richard is, what role can new technology, blockchain, holochain, play in challenging some of the problems you discussed? So the role of new technology. And then an interesting question from Gillian. She says that the cooperative union, now Co-ops UK, used to have accounting standards published and revised at various intervals. And the main issue with them was that each cooperative decided whether to use the accounting standards or to do things differently, and many chose not to use them. So how will cooperatives internationally be encouraged to move to a new SORP? So,
Shall I go first?
If you're ready.
So technology, yes, absolutely. Technology is fundamental to the success of our understanding of the planet and society, and making better informed decisions. Absolutely. You think about how would a business do something as basic as map its carbon footprint without technology. Imagine trying to do that with a pencil and paper. And right through to the massive amounts of potential that we have with data and satellite imaging and so on, that actually can help us produce crops more efficiently, that can track deforestation better, can track pollution better, through to the technology that enables us to create data models of businesses that around climate change, that would help us understand, that would help us do scenarios and forward planning in a way that we never dreamed of before, that would help us audit businesses in a much more informed way, because those data models can add to your professional skepticism while doing the audit. So technology has a massive role to play.
Anyone would like to respond or express their views on how you can convince cooperatives internationally to use SORP? Maureen would like to.
I don't think it's a solution of how we're going to persuade co-ops internationally to do it, but I think we need to, I think it's an argument that needs to be put to the cooperative movement, that there is a problem in that co-ops are invisible. And it's a problem, it's not just a problem in the UK, it's a problem sort of all over the place. And that I think people think that accounting's not terribly important, but it actually is. So there's two arguments to be made, is, you know, how important it is how the accounts are put together, because that will tell a story about the organisation, and how important it is that the story that's told is the co-op's own story and not somebody else saying, but you know, you're just a rather weaker version of either a for-profit or you know, or a philanthropic. You're not properly philanthropic, you're not properly for-profit. What are you then? So we need to develop a way of telling that story quite strongly. But I think it is a question of convincing people. And I think we've got a little bit further maybe with the project that's been going for a very, very long time. And I sort of came quite late to it and realised there's a massive body of work that's been put together pushing this idea along, but maybe its time has come a bit closer.
Any comments, any questions? We have 5 minutes left.
Roger has just put something in the chat.
Yeah. So any thoughts on incorporating UN SDGs into both measuring corporate performance and linking to broader goals of adapting the financial system, which I think links also to our second panel on Saturday. So Roger probably would like to attend that as well. Anyone? Richard?
Yes, yes. So probably I'll say all this again on Saturday. But I think that the thing is that the goals can actually operate as an incredible framework for thinking about how you're going to achieve whatever it is you want to achieve. So I was very inspired. Colombia was one of the countries that formulated the whole SDG process. And what they've done is taken the framework of the goals and said, ultimately, what we want to achieve in Colombia is peace. But in order to achieve peace, we need to meet all of these other outcomes. So to have peace, we've got to have gender equality. We've got to have economic prosperity. We've got to have literacy and sustainable cities and so on, and using that as a framework. Now, doing that is moving away from this kind of rather philanthropic approach many businesses take, which is, you know, we support WWF, so we can say life on land goal or life on the water goal. And those ones that say, no, these are outcomes that the world wants to achieve. So we depend upon these outcomes for our business success. So how are we going to make these dependencies? So what impact are we going to have on these dependencies in order to secure our business success? And I think that it's that strategic view of the goals rather than a philanthropic view of the goals that needs to happen. And that's how I think, because they can also be a kind of framework for holding you to account as well. And we at RCAW are going through a process of embedding the global goals as at the heart of our strategy.
Right, yeah, and as I said, we'll cover this more in detail on Saturday, hopefully. So we have Nick Matthews. Have you raised your hand? Yes, and then John.
Hello. Good afternoon, everybody. I've really enjoyed this discussion. It's been very, I have to be careful what I say, because if we make it too exciting for people, we'll get even more participants wanting to talk about cooperative accounting. You've managed to make something that most people would find incredibly tedious really interesting. I think my point goes back a bit to some of the previous comments about, what gets measured is what gets done. And the problem I find as a cooperative director in a society is that the present accountancy policies are so unbelievably untransparent for a non-accountant. Our member, a lay member, can measure our performance when we struggle to compare one year with the next because of changes in accountancy standards. And also in larger organisations like ours, we have to have 3 or 4 different accountancy standards for different parts of the business. So the pensions fund has got one set of standards. The way we treat funeral bonds has another set of standards. And so for a lay member, it's very difficult to understand what the blinking hell is going on. When the last round of accountancy standards was changed to FRS, I think it's 102, isn't it? We encouraged societies to use the narrative of the accounts better. I'm just wondering if colleagues have got any ideas about how we can, I think whatever standard we end up with, the numbers are still going to be quite complex in large co-ops, in large businesses. Have you given any thought to how the story we tell around the numbers and how we explain the numbers for a lay audience of members so they can understand the performance of their cooperative and what value the cooperative is creating in words as well as in numbers?
Thank you very much. Can we take all questions together and then give the opportunity to the panelists to contribute, because I think we're running out of time and it's a very interesting discussion. John and Ian, and then I will also read a question from the chat, and then we can go back to the panelists quickly.
Okay, it's just probably 2 comments partly, or as questions. One is, have you had any contact with the people working on an international not-for-profit standard, and anything to learn from them? I know CIPFA were involved in that, Chartered Institute of Public Finance and Accounting. I think we still are. The other thing is, in terms of actually getting a SORP off the ground, it would probably be a UK SORP. It would probably be at the level of a country, so you would get it up and running. And previously, I think the Cooperatives UK, or maybe it was the Co-op Group or Cooperative Societies as a group, had looked at a SORP and reckoned you needed about £100,000 a year to run the secretariat function. So it's kind of a practical issue of, if you get a SORP, how would you see it funded, the secretariat function? And at the moment, for example, the Charities SORP, CIPFA are providing the secretariat, and they were providing that free to the Charity Commission.
Ian, did you want to?
Okay, I might have written my question in the chat. It's slightly facetious, but
Ian Adderley is, I think, also. Is that correct?
Oh,
Sorry,
yes.
confused the Ians.
Okay.
I was just going to respond, but I'll wait until you bring the panel in.
Okay. Sorry, Ian.
Well, the point is, how do you deal with powerful actors that basically don't give a damn? So I was involved in the Rio +10 workings for the UK, and the new president of the United States signed an executive order to say that CO2 was no longer a pollutant. And that meant that as far as the US were concerned, formally, there was no issue with carbon. It had disappeared by executive order. And these people are now in positions of power. So yes, how do you deal with bad actors, I suppose, with lots of power?
Okay, so if I can sum up the final questions, they're all very related about how we account. So the one is about how we account for this style of governance from Ian, and also how do we tell story to a lay audience and how we word, transactions in accounting to make them understandable. And the final one, which I think it's nice to close the session, is about what the panelists see as the next step that they would want to happen and when. So kind of interrelated question. So if you would like to respond to that, or all of them, any of them.
Yeah, perhaps if I can comment, one of the things I said at the start of mine is that the accounts would contribute to the articulation of what the cooperative was doing and how it was a cooperative and the ways in which it was doing it. So to your question, Nick, I think there's a lot of scope for a lot of free text narrative that societies can publish as a separate document or a different report, explaining things to members. And whilst the greater the scope to do that within the financial statements and the accounts, the better. That's not the only tool in which societies can provide members with the information that they want. I think on some of the other points, I think there's some practical questions there around the SORP and the next steps, and I think it's not really for me to sort of to comment on those, other than to say we're very happy to engage with people as these move along. I think that if you're looking at cross cooperative wide, you're obviously looking at something that goes beyond our sole remit, but we're very happy to provide sort of input or take part in discussions.
Anyone else would like to talk about what next and what they see as the next steps, kind of recapping, and what they want to happen and when?
It's something good.
Yeah.
Right?
Maureen?
Oh, Maureen, right. Okay.
Sorry, I was giving way to you, Rory. Sorry. I think, and I know, John, the 100,000 a year for the Secretariat sounds so incredibly off-putting, but I think we're not quite that far. I think what we need to do is build momentum, and we were hoping, as Daphne said, we had hoped that we'd be able to do some focus groups to see what what people in the co-op movement think would be a good way to go about it. So I suppose we need to get expressions of interest for people who will be willing to engage with this and think it might be a good idea, might be worth taking forward. So if anybody does, Elisavet's put email addresses in the chat, so please do get in touch with us.
And yeah, hopefully prove that accounting and accountancy isn't boring at all, as Andrew says. And I hope we get this discussion and we continue in the panel on Saturday, because I think there are many links, between the two sessions. And yeah, thank you, everybody. I think it was a great session. Thanks to our speakers for their contributions. Thanks to the participants for the feedback and comments. Rory, would you like to?
Just to say thank you. Thank you to our keynotes, our panelists.